Investing in hedge funds for beginners. Hedge fund startups. It's important to realize that a hedge fund is a business, and it must be approached with the same systematic approach and long-term perspective. Here are some factors to work through. 1. What's your competitive advantage? Your hedge fund must have a competitive advantage over others in the market. This can be a marketing advantage, an information advantage, a trading advantage, or a resource advantage. A marketing advantage might be close relationships with hundreds of high net worth investors. A resource advantage could be a connection to an asset management firm that might invest heavily in launching a hedge fund. 2. Define your strategy. Some hedge fund startups underestimate the importance of clearly defining the fund's investment strategy. Define your strategy and hone it until you can explain it succinctly to your own team and initial investors. The strategy must be repeatable, defensible, and profitable after paying the costs of running the hedge fund. Ideas that have not been tested in the real markets don't hold much water with investors and consultants, who see hundreds of wannabe hedge fund managers every year. Do some hedge fund performance research so that you know which strategies are currently doing well, which are not, and why this might be the case. Are you launching your fund at a time when your strategy is in very high demand, or has the pendulum swung the other way? Start building a list of hedge funds that run a similar strategy and conduct as much competitive intelligence on them as you are able to, ethically and legally. 3. Find the seed capital. It is important that your new hedge fund be adequately capitalized. The amount of assets your fund will need to manage to become profitable will depend on 3 things: your team size, your investment partners, and your unique cost structure. With respect to capital, according to the hedge fund law firm Seward Kissel, the amount required to launch a hedge fund is increasing. In its 2019 new hedge fund report, the law firm stated that hedge funds required significantly higher minimum commitments from their investors compared with funds launched in prior years. Seed funds for new launches were sometimes well over $100 million. In 2018, Stephen B. Nadel, who was the lead author of the Seward Kissel report that year, said that rising investment minimums were partly to help new hedge funds get on the radar of institutional investors. Some of the big institutional allocators, they may not even talk to you unless you have 100 million or more under management, he said. 4,000. The number of hedge funds liquidated from 2015 to 2020.14. Develop a marketing and sales plan. In any business, nothing happens until a sale is made. It is important to develop a sales plan for raising assets before you open your doors for business. One of the first steps is deciding where you will try to raise assets. There are many potential sources of investors, including seed capital providers, family and friends, high net worth individuals, financial advisors, wealth management offices and RIAs, single and multi-family offices, fund of hedge funds, corporations, foundations and endowments, pensions, sub-advisory relationships. Small hedge fund startups typically rely on seed capital providers, family and friends, and high net worth individuals, directly or through their financial advisors. Working with institutional quality investors who might invest $25 million to $100 million at a time can be difficult unless you have a track record and more than $100 million in total assets under management. Your toolkit must contain all of the basics that any solid business today has. That means a website, a 2-page marketing piece, a 20-page PowerPoint presentation, a professionally designed logo, letterhead, and business cards, plus folders with the logo on it for presentation at business meetings. These may sound like Business 101 details, but they are often overlooked or poorly executed. Anyone who can really help your business sees hundreds, if not thousands, of hedge fund managers a year, and it is easy for them to see which managers have invested their time and effort and which have thrown something together at the last minute. All marketing and sales materials should be produced under the direction of your chief compliance officer or compliance consultant, as there are many limitations and details that need to be approved and reviewed.